Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. Our next topic is Trader Talk in today's market, and I'm your host, Kevin Horner. I want to thank you all for joining us this morning today. I am pleased to be joined by my friend and fellow coach, Miss Connie Hill. Hey, Connie, it's great to see you on this fine Wednesday. How you doing this morning?
Oh, doing good. How are you, Kevin?
I am great. We have had a fantastic kickoff for this week. Lots of green on the screen on Monday and Tuesday. And today represents maybe a second follow-through opportunity for us. So I'm excited to get into the charts with you, Connie. But before we do so, I want to take a minute and address all of our needed detail. First of which is, of course, that we have Barb Armstrong in the chat this morning. Please say hey to Barb. She'll keep an eye on things that we're unable to get to from your comments and questions. But have no fear, those are important to us. We want to hear from you. So if you've got questions and comments relative to our discussions, please bring those into the chat, and we'll try to bring your comments into our discussion as well to work through today with all of you. Now, if you're not already doing so, today's a great opportunity, a great time to make sure that you are subscribed to the Schwab YouTube coaching channel. So I want to remind you about that real briefly. I've got that page up, and you can see the subscribe button right here next to the Trader Talks logo there. Make sure you're subscribed here. This is our central repository, of course, everyone, for everything that we do for you. 90+% of the content that we do live every day here is available in our archive. So would love to have your subscription there. And don't forget, the three of us coaches, we are also available here on X, so you can follow us individually that way as well. Barb Armstrong CS, Connie Hill CS, and Kevin Horner CS. All right, with that, let's jump to some disclosures so that we can get into the charts. First, remember, our conversation is exclusively informational and educational. We do not make recommendations nor endorsements for a strategy or approach to trading the market. Please bear in mind, technical analysis is simply a piece of the decision-making puzzle. We do not encourage you to base decisions exclusively off technical analysis. In truth, we don't encourage you to make decisions exclusively off of one piece of information. It makes sense to combine a multitude of data points when you're deciding to enter or exit the market. Now, as far as our agenda is concerned, everyone, we work through a top-down approach here. That means we start with the broadest of indices. We'll hit the S&P 500. We'll look at the NASDAQ 100. We'll then move into the Russell 2000, some additional industry groups as well, and sectors, not to mention some stocks in the news. So that's about what you can expect over the next 40 or so minutes. Let's start with that S&P 500. And Connie, like I mentioned, right off the jump, we've had a fantastic gap from Friday into Monday, and it's given us another level that has finally been achieved. So as traders here, having moved through this level, this is telling us something both about the health of the S&P, but also giving traders who wanted to be bullish all the while some ways to manage risk now that we've moved through some important levels here. What are your thoughts on what you're seeing in the S&P 500?
Yeah, it's continuing a nice roll like it had the last couple of weeks, making higher highs, higher lows. I think giving traders an idea that they can feel comfortable, maybe shifting their posture. Maybe they've been a little bit more defensive, that maybe now they can be a little bit more offensive. And I like that resistance level that now should act as support for the S&P.
Yeah, that one down here at around 5,800. And the challenge is merely, Connie, that of course, that's 100 points away all of a sudden. You know, we are testing 5,900. We are not through the high we created yesterday. I found it kind of notable that we traded up to that 5,906, backed off intraday. We really couldn't hold it. As you can see, our close yesterday was at 5,886. So didn't quite get through what we wanted, but we could see potentially a little bit of carry here, Connie, if we could move through those yesterday highs, something that a short-term trader might use as a very quick signal. If we can move through the high we created yesterday, we could maybe squeeze into some zone in here around 5,950 to 5,960. Is that kind of the area that you're eyeballing as far as short-term potential resistance in here?
Yeah, I think so. I have something in a very similar area. And like that line you just drew there, that it is an area, it's not one fine little line in the sand, but kind of an area that we want to focus on. And so, yeah, I like where you've got that drawn.
Yeah, I do a lot of line drawings in the segment, but when I have an opportunity to highlight the fact that price action frequently moves into zones rather than definitive lines, I think it's a good reminder for us. So, using the rectangle and reminding us that some of us like to take pieces off the table rather than the entirety of our trade. When price action gets achieved and you move into a certain zone, maybe it's 20 SPX points of that zone of resistance. As you start to move into it, some traders just start to piece out of those positions. Here, sell 10% of the trade now, let it go a little further, see if it continues. Oh, it went higher? Great. I'll sell another 10% of the trade. Point being, there's a plan to address selling into strength. And I think that that's a pretty common one that some traders will incorporate. The last thing that I want to look at real briefly, Connie, is for our very short-term traders. I'd like to look at that 5-minute bar and just remind us as to where we are on the open. And we've kind of put ourselves in a decent open. We didn't gap anything substantial. You can see we've held the pivot here, Connie. But when I was just talking about moving through that high of yesterday, you can see we are pausing at it as we speak. So pretty notable spot for those short-termers, huh?
Yeah, and of course the day's early, so very well could go past it. We'll have to see if it really does, if there's enough oomph in the market to help it do so.
Yeah, oomph would be great. Another carry forward day would be fantastic. Now, last thing that I'm going to say about, just the optimistic the viewpoint we've had here. Boy, do I have some lines drawn in. Let me back this up as we're looking at the NDX here. We've had a great run for now 3 days in a row. In fact, we could actually go back to the lows we created on April 7. And if we're talking about the move we've made to today's peak in the NDX, Connie, this is up almost 30% now, 28.8% from the trough, our ultimate intraday bottom, April 7, to where we are right now. It's been an amazing push. But again, I think the reminder needs to be we can't allow short-term movements, short-term optimism to overweigh our plan and our process. I imagine that's something that you lean into pretty heavily yourself.
Yeah, but we're looking at what we might call a V bottom versus a U bottom, and sometimes a U bottom gives us an idea that maybe it's a little bit more healthy, more stable if it can go ahead and create a basing pattern. But a V bottom can be really powerful as well. And like you said, this particular one has moved a great deal in a short term, in a short period of time. And and my estimation, just making those higher high, higher lows, making it seem, legitimate as far as the recovery that it's experiencing.
Yeah, it does feel legitimized, and yet, I tell you, traders, you get a little nervous if you didn't expect it, right? I mean, there's many, I imagine there were some of us who might have been plugging our noses and kind of still buying in this window back here. And then you've been rewarded with the move, and that feels good. But if you didn't prepare for such a move, you might find yourself a little bit uncomfortable sitting on profits. This is something we traders deal with too, right? Shockingly, dealing with trades that are going very well for us, it can actually create as much stress as the ones that are moving against us because we're simply trying to maintain profits every step of the way.
Yeah, I would say it's less stressful. Managing your profits than if it's going against you. Sorry, I'm going to take the opposite side there. I think it's a little bit more stressful when the trade's going against you. But having that strategy, and one thing you mentioned is, you can kind of rotate out of the trade a little bit at a time. You don't have to, it doesn't have to be an all or nothing type of thing, but you can do it kind of piecemeal. If you want to take some profits, leave some on, see how far it could go after that.
Yeah, and I think that's the takeaway, right? We are all very different traders as how we go about the process. Some of you are all in and all out. You put every dollar you want into the trade right at the entry, and then you close the position all at once. Some of us step into those trades. I'm a little less certain of this move. I'm going to start with 25% of what I want. Okay, we move through resistance. I'm going to add another 25% block. And the point is, there's a plan that gets us where we want to be. And I think that for a lot of traders along the way, selling a little, raising stop orders in an effort to protect your capital, your profits on the trade. It's been a good process. Utilizing that consistently, carrying that process into all of our trades. Consistency is so key if you're wanting to be a trader over a long haul period of time. It's that consistency that generally tends to reward us for our efforts over time. You're going to make some mistakes. We have trades that go against us, but the purpose of risk mitigation and the planning process is to keep those risk levels at comfortable areas, comfortable amounts for us. So hopefully that's something that we are all incorporating here. So I hope you're all taking away the idea that maybe the gap zone is an exit strategy for some on weakness. Again, I got to point out, it's 682 points away here, Connie, at 20,600. So if you want to be a seller on legitimate weakness here, you're going to have to give up some of the existing profits we've had in the last few days. And that's not exactly comfortable for everyone. Connie, anything else that you think is pertinent as it relates to the NDX here before we move on?
No, let's go ahead. Let's pull up your next chart.
You got it. Let's look at those small caps. The Russell, another one that has managed to pop nicely. Connie, that 2,000 level on the Russell was substantial for us a number of times in the last few years. I can highlight this on my weekly chart and show you the way that breaks down. Let me kick this back to about 10, and you'll see the ovals I've drawn in at that 2,000 point level. So we cleared that again. Can we be optimistic as we want to be on such a move?
Yeah, I mean, it's well beyond that zone now. Yesterday's move was really big. And so it has been one of the weaker indexes. And so being able to see a little bit of a reversal of trend is helpful here, letting us know the small cap stocks want to participate as well.
Yeah, we don't mind that. Small caps have certainly struggled. And of course, the conversation relative to the potential for a recession is never good for small cap stocks. They tend to take it on the chin quite aggressively. Now, a couple of things that I noted, Connie, the level that we rallied to, are you at all surprised to be taking a breather here?
No, we really shouldn't, because when we identify those areas of resistance, just know and plan, it might take a little bit of extra news or extra something to get it over that area of resistance. So yeah, a lot of times we'll just see a little pause at those areas, and that's fine and normal.
Yep. Yeah, exactly. I think something that newer traders struggle with, Connie, a little bit when you see a stock run into resistance like that is the idea that it's pausing, but a pause does not imply a reversal, does it?
Yeah, exactly.
It'd be hard to remember. Okay, I want to draw a couple more lines in here because I'm a fan of drawing lines. So I'm going to put another trend line in here as a potential thing to eyeball. So we've got a little further confluence at that red resistance at 2100. Connie, what are your thoughts about slipping through 2100? Does it mean if we closed above 2100 or 2110 here, are we looking then at maybe the 200-day moving average in blue somewhere in the neighborhood of 2180?
Yeah, that would kind of be the next market. And really, if it were to clear where it is right now, that diagonal resistance, breaking that is significant, certainly. And sometimes traders only look for a break of diagonal resistance. And so in this case, it would be two areas of resistance that the index, if it were to move through there, I think that would be significant and give it a little bit of room to run up to that 200-day moving average.
Yeah, that would be not too bad at all, would it? That could be kind of a momentum-based push if it could manage to get through this area.
Yeah, exactly.
Wouldn't mind that at all. In fact, everybody, I'm just going to duplicate this line, and I'm going to put another line up there at that approximate 2180 or so, where we might see it move if we can get through. So, for those of you who maybe are a little new to the idea of technical analysis or utilizing price action to understand the way the market's treating us, some of these details are just thinking about it in advance and seeing how things play out. And I think our friend Ben Watson does such a great job of discussing the if-then viewpoint that a trader likely needs to employ. And that is simply, if price moves through this area, then that tells me something, and I will then take this action. That can be a move through resistance, means that I need to be a buyer. Move through support might mean that I need to be a seller. Whatever that is, having that plan and knowing how you want to attack the market when you're given that specific price action that you were looking for, it's that process that benefits the traders. So again, technical analysis doesn't tell us what's going to happen in the future necessarily. It just allows us the opportunity to hopefully properly set our risk approach to each individual trade. So that's what we're kind of watching here. Now, last thing I wanted to talk about in the major indices, everybody, is just the reminder that when we have made a great move to the upside, there's always an opportunity to start to pull back a little bit, right? When do we start to see these moves to the upside get a little bit tired, or when will a trader start to take a little bit of profits on initial weakness? We've talked about use of support, potentially using standard moving averages like we've got on the chart here, but I think it's also helpful to be mindful of the fact that you could be looking at a close below below the low of our high day in any rally. So many of you are familiar with the hold concept, closing above the high of a low day in a drawdown. Something we got, eventually got back in this window here. We made our low in this area. This day was the high, or maybe we could call this one the highest, and say, hey, I'm only comfortable when we have traded through the high of our low day. Well, this would be the inverse of that. And if we've made a strong push, as we have with the Russell, percentage-wise, just to draw this in, everybody, it was about 22%. And then if you look at yesterday, if yesterday is in fact our high in this rally, well, then closing below yesterday's low might be the first indication that a deeper pause is in place. And some traders would utilize that as a means of profit taking. So I bring this up because I'm always asked, Connie, hey, how do I know a rally has run its course? How do I know when I should be looking to take profits? I find this concept of close below the low of the high day to be so important and helpful for a trader.
Yeah, that certainly can be. The other thing I like to keep in mind is, it's really natural after a big run up to have a little bit of a pullback, right? Markets don't just continually go straight up, but it could have that pause, have that pullback, and still be in an uptrend. And it's just a part of the uptrend. Maybe it's coming down, forming another higher low.
Mm-hmm. Yeah, absolutely. I mean, we've had that, right? Especially here. Let me remove this oval. We had it right here initially. Another one right here, another one right here. So, this is a great point, Connie. It's a wonderful reminder that, yes, we could be getting that move, this pause to the rally, and yet it does not mean reversal. It just means potentially a pause. How do we start feeling about that? Well, again, I'm going to bring you back to the same idea, everyone. Why not start piecing out of your trade? If you are a buyer in the lows down here, great on you, by the way. That was a gutsy entry point. If you were a buyer in early to mid-April, good on you. But some steps along the way. Moving through the low of the high day could be a spot where some traders cover a little bit. Another one would be a gap level like the one we created from Friday into Monday. That's another spot where trades beneath could be weakness sufficient to give traders reasons to take some profits. And then you look down here again, we've got excellent support where at that 2,000 level once more. You break 2,000 to the downside, not only do you break an important level from a mental area, right, Connie, given the history of 2,000 on the RUT, but also you got to pay attention to the fact that we've got a confluence of data there. That's a 20 and a 50-day moving average together right at the same zone of support. If you traded below that, I think, Connie, that's a spot where some traders would say, yeah, on second thought, I'm moving on from the entirety of this trade. I have broken all of my former supports.
Yeah, and you would want to look at that way and keep that in mind. Yeah, that if it really were to fall from where it is right now, clear down to where you've got that oval at those three areas of support, yeah, that would be significant. But right now it's not really showing that. And it's good to say, hey, if it does that, then I know maybe I need to pull off some bullish positions. But right now, I don't see it really as a factor for any decisions today.
I totally agree with that. Thank you for bringing that to the table. I definitely great reminder that as we're watching this, sometimes these decisions intraday aren't the right ones, right? And that's why we, if you remember back just 2 minutes ago, talking about the close above the high of the low day and close below the low of a high day, those are both starting with closing values, everybody. Intraday price action can be much, much different. So please keep that in mind. All right. So there's a look at our broader indices, the S&P, the NASDAQ 100, the Russell 2000. Let's look at the semis, Connie. I have been a frequent viewer of the semi space here. The SOX has been in one heck of a rally itself, but the reminder I like to give is the SOX peaked well before the rest of the market. You know, the S&P, the NASDAQ peaked here in early February. The semis peaked in July of last year. And partially, I think, we went through this retracement, this pullback as we were digesting the news. And you could see we held a lot of those levels for a boatload of that time. But once we started taking out these levels to the downside, boy, did momentum carry us and gave us a really good low in the semis. Now, we have rallied back. So it's been a good push the last month now. What are you watching as it relates to semiconductors here?
Yeah, I really like how it's kind of moving beyond the areas you've identified there. Your blue, I think, is a 200-day moving average. And so it's nice to see it finally above that long-term moving average. And really, it's above all of them at this point. There could be, a little bit of resistance. I want to say wherever that last peak was, maybe around 5,400, might be the next area of resistance that it runs to. Yeah, something around that range, which there's really quite a bit of space from where it is right now to approaching that area for somebody maybe looking at swing opportunities.
Yeah, that's a good reminder. But let me ask you this. If that's the case, Connie, if you're thinking about targeting that zone up there between 53 and 54, given the move we've seen, is it maybe one of those deals where a trader says, hey, I'd feel better about buying it closer to the 200-day? I guess, depending on where their exit is, right? I mean, some would say they would be looking to exit on any long side trade if we traded through the low of the gap level. Is that kind of for a short-term trader the area of most import here, given what we're seeing?
Yeah, certainly. The bottom of that gap or the top of the gap, really, many times I see it really act as support. And so if it violates that, then certainly it would be, oh, we better maybe take a second look here. As long as the uptrend is in place, even if it were to pull back to that area below your dotted white line, as long as it's still making higher highs and higher lows, maybe not as big of a concern, but maybe as a short-term trader, yeah, certainly looking at that area that you've identified, I would use that as a support area. And you could use it as a support area.
Yeah, and I think the reminder is, one of the things that a trader wants to see if you want to be a buyer there is a candle that kind of resembles the one we used on Monday, right? Maybe an intraday test, even trading below the 4707 zone on intraday, so that you have, but a rally back that closes above it could be instructive for the trader. That would appear as a test of that level, a successful test. But it would certainly be a little bit more comfortable than being a buyer up here, 200 points, 220 points higher. If you're going to, be looking to exit on a close below, say, 4,700, you are taking on a little bit more maybe risk versus the reward opportunity here. Trading at 49.30 and our upside could get you to 5,300 if that's your viewpoint. Well, then you're risking about 200 points to make 400 to the upside. That's not terrible. It's a 1-to-2 ratio. But if you allow the price to come lower, nearer the 200-day moving average, nearer your exit point on the downside, well, now risk versus reward is a little bit more in your favor. So just one other way to think about it. I did see a question in the queue that I wanted to address. Steve is asking, what's wrong with buy and hold? Been using it for 20 plus years. It avoids paying capital gains at death. I totally understand that. But, Connie, we talk in this class, at least we're talking to traders. We recognize that not all of us are traders, but even investors can gain knowledge by utilizing technical analysis, maybe not on a daily chart, but perhaps on a much longer window of time, a weekly or even a monthly chart can tell an investor quite a bit about the current trend, can it?
Yeah, and maybe decisions are different for a swing trader than they are for somebody that, let's say, like Steve says, buy and hold. Yeah, you're not going to be quite as reactive to the different signals that you might be seeing as a swing trader might be. But it does, I think, give you perspective and, in a lot of way, confidence to maintain those positions that you have.
And that's what you need, right? Confidence to maintain.
Yeah.
My reminder, as usual, is the idea of what trends tell us. The trends, the longer a trend is in place, the stronger that trend is. It doesn't mean that trend won't break. Eventually, trends break. But if it's a longer term viewpoint, I'm going to use this. I'm going to go back just as a quick example. The S&P is a wonderful representation of this, Connie. If we go back to just the COVID bottom, and look at what we have seen. Many of you who are in this class frequently, you know what I'm talking about. I drew this in a couple of times for us. Should we be surprised that our selling at the beginning of the month paused here? I would suggest no, Connie, because that we had done it a number of times here, right?
Yeah, love that long-term look you've got up there. And sometimes we forget to go back a little bit more in time. But when we do, we might find some interesting things like you just did there with that long-term support area that we might not otherwise catch if we're just staying on a one-year chart or a 6-month chart. We might miss some of those key areas that, could tell us, oh, look, it's bounced here many times. Let's see if it bounces here again.
Yep, exactly that. We're not telling you that technical analysis is the end all be all. I certainly don't believe that. My hope is that many of you are taking an approach that allows you to maybe, if you are looking to trade, dabble a little bit, doing it with small portions of your investable assets. Think 10 to 15, maybe 20% of what's available to you. And then that broad 80% level and beyond, that needs to be developed in a long-term plan that is diversified. You manage risk through diversification and asset allocation rather than the use of stop orders or exit strategies on your trades. It's a very different process, but it's one that we at Schwab definitely believe in over that long haul. Certainly something that you can gain from a discussion with a consultant in your local branch. If that's something that you've not yet done, please know that is available to you here at Schwab. So great question. Glad I had the opportunity to address it. Let's take a look at some of the stuff that's also moving around this morning, Connie, before getting to some stocks in the news. I noticed some of us were pointing out the VIX has moved a little. We have seen the VIX retreat to a very nice level for us, broke 20. What are some of the things that maybe general traders are thinking about, but also an overall risk? What is this telling us about the market at this point? What are your thoughts?
Yeah, the market's not nearly so jumpy and fearful as it has been. 2-3 weeks ago, the tensions were a little bit high. But as that VIX has settled down, right, coming down to lower levels gives you the idea that, okay, the market isn't nearly as fearful. Now it is bouncing a little bit today. I don't know that it's anything to be overly concerned about because of the general area where it's been, say, in the last 3 days is definitely in an area that could give confidence to some of those with bullish ideas and backing off maybe some of the defensive ideas.
Yeah, maybe defensive. Do you think that this could be just a little bit of some protection of the run, but B, some look ahead to tomorrow's PPI report coming out ahead of the open?
Yeah, that could be.
Yeah, I think that, we tend to believe that VIX moves are entirely tied to fear in the marketplace, but it's helpful to be reminded of the instances of data that could be coming out that will impact overall traders. And after a fantastic move to the upside that we got from Friday into Monday, and not to mention everything that's happened since the April 7 lows, traders are probably looking to maintain the investments they've put on the table over the last few weeks. And the only way to really protect that, in lieu of the use of exit strategies, stop orders, etc., is to incorporate put options. And that's what the VIX is reflecting here. SPX put options potentially as a means of protecting broader portfolio allocations. So hopefully that's what we're seeing. But again, the fact that we're under 20, I think, stands out. What I think the walkaway is today is, do we see the VIX moving through the gap level that we created this week, and a move back higher through 20, through 20 and a quarter? That could be a little bit instructive in terms of a potential broad market pullback here. I think that bears watching. Anything else you'd like to comment on as it relates to the VIX, Connie, or should we move on?
No, I think we've kind of summarized what we're looking for out of the VIX,
right.
and I like that new little area. So yeah, let's move on.
Yeah, that's pretty important. I agree. Let's hit up some of the commodity moves real quick. We'll touch on oil, which has been popping, but only to an area of resistance. Looks pretty rangy all of a sudden, doesn't it?
It does. Those are some great lines you've got on there. And really, oil has stayed in a lower zone per se, but it seems to be, just kind of stuck in a sideways pattern there. So, if we see it back down a little bit, it shouldn't be too surprising.
Yeah, I not at all surprised. We've got that downsloping 50-day moving average that remains overhanging us. The rally in oil hasn't really taken us to a new level. The RSI moved into the mid 50s, not exactly an indication that we're due to break out here. So, watching resistance makes a bit of sense as it relates to oil, though. The other ones to hit on real briefly, I saw some inquiries on gold. Gold has paired back to the major moving average, this case, the 50-day. It's just been stair-stepping its way, Connie. This is potentially a spot where a trader who's been watching this since December says, hey, the opportunities at the 50-day have been my chance to join the trend. Should I be thinking about that right here? I'm guessing there's a lot of questions about that right now.
Yeah, and also that horizontal level. Gold's been kind of staying in a range as well with its kind of low points right where you've got your oval and right where that price action is today. And so it'll be interesting to see, is it an area that maybe rebounds here and goes up? We'll just have to wait and see, but I like what you're showing there.
All right. I'm glad I get some agreement out of it. Last thing is, of course, do we see this pop to the upside? Can it close over about that 34.50 or so? That by itself would be a bit of a heads up of a potential continuation here. But I know a lot of you would rather be potentially, buyers near support rather than a breakout buyer. So watch to see if we can get a bounce in here akin to what we got back here. Look for something like a doji day, maybe tomorrow or the next day, indicative of indecision of the traders, everybody. If you can get indecision dojis like that at areas of support and areas of resistance, it's pretty instructive for the trend, at least in terms of pausing a recent rally or pausing a recent sell-off. So we'll keep an eye on that for you, as we always do. And then
one other thing
I'll
add here, Kevin, is with the tariffs, the trade tariffs, and what's been going on there. As those tensions were building, gold was getting a lot of movement and a lot of interest. But if the tariffs are starting to recede a little bit, maybe that isn't being perceived as much of a difficulty in the market, then maybe that's subsiding. The gold trade could kind of follow those trends as well.
Okay, so in that sense, if we were to see that the SPX continued its move to the upside, as an example, and some of the narrative and rhetoric around tariffs continues to soften, maybe we actually see a breakdown in the move in gold. Is that a potential here as well?
Yeah, exactly. That's what I'm saying.
Okay. All right. Well, it would be notable, for the record, everyone. It would be a big deal if we got the gold futures back under the 50-day moving average on a closing basis. And I say that because you can see we got back above it and have held it since the first week of January. So a close below the 50-day would be the first potential indication of a breakdown. So that bears keeping an eye on here, everyone. Please keep that in mind as well. All right. The next one we're going to hit before moving to some stocks in the news this morning. How about Bitcoin? We've been talking about Bitcoin as a measure of really a proxy for the the appetite for risk in the market. And it seems like that appetite was building in advance of some of the rhetoric softening we've had in the last week plus. And you can see, Connie, that's just been a series, a couple of separate bull flags now, in the sense, now that we have broken what once was a very quick downtrend. But since that got broken, it's just basically been off to the new trend and races here.
Yeah, it's had a very healthy climb over the last 2-3 weeks. And right now, looking like maybe it's flagging a bit.
Mm-hmm. You think that 20-day is fast enough? It sure doesn't seem like it, does it? I mean, like almost like we'd have to change this. What about a 10-day? It seems like I need to make an adjustment there. Let me bring this in from my studies here, everybody. Put a 10-day only on. Well, I'll tell you what, you could do worse than to work with a 10-day, it would seem, Connie. We had that one boy, look at that. I just got done talking about indecision dojis right at doji candle, right at former support. If you were looking at this day, this was a pretty decent candle day, but the 10-day essentially has been held for the majority of this move.
Yeah, it really has. And it could be even steeper. You could throw a 5 on there, but the 10 is probably good enough.
Yeah, I think for many it would be here. Goodness, we've outside of this one here where we were questionably closing on it or below it. We basically have been there since April 11. So that was very quickly after Liberation Day, a week and a half later, and found our lows, and Bitcoin kind of led us, higher here. And again, seems as though the risk appetite was there with Bitcoin. So there you go, everybody. There's a pretty decent look at what's been going on. Obviously, the resistance zone up here is also notable around 106 now, 106,000 that is. Moving through there could be a substantial breakout. So doesn't mean we have to break out, as I remind you, everybody. Resistance is there for a reason. So we'll continue to monitor that as well. How about some stocks in the news, Connie? We had a rough day yesterday on one of those Dow 30 stocks. Let's take a look at United Health. Unfortunately, the daily chart probably isn't going to offer us much, simply because we've fallen to some pretty darn important levels here, haven't we? My goodness.
Yeah, it really took a tumble yesterday, dragging down the Dow.
Look at the weekly on this one, Connie. Oh my gosh. Oh my goodness.
Cliff diving.
Yeah, that is, I could call that a waterfall move.
Yeah.
I mean, that is ugly. 600 to 300, and it did it. I mean, the peak at 6 here on the 7th. My goodness. So headlines. I got some downgrades here. I don't think anyone's going to be shocked. Now, they yesterday the news was tied to Andrew Whitty stepping down as CEO. That's the big news. But Raymond James double downgraded United Health to market perform, previously from strong buy. They did not put a target on it. That's a problem, Connie. When analysts are so uncomfortable they can't even put a price target on it after the stock is sold off 50%, that doesn't sound very good. The comment is the company abandoned their 2025 outlook just a month after cutting guidance. They're transitioning to new leadership. That's not necessarily great for certainty. They're not alone here. Bank of America also downgraded United Health to neutral, had been at buy. New target here at 350, down from 560 after suspending guidance. So rough go for United Health. And I couldn't help but bring this up because the move has been so substantial. Connie, when things like this occur, I mean, is there any other way to look at this? I know traders will say, or investors would say things like, well, I could have had it at 630 just a couple of months ago. Shouldn't I be a buyer at 300? Not everybody feels like that's a good entrance, do they?
True. You'd want to go back to those old support and resistance areas. Where is it likely to fall back to? You could use a Fibonacci as well to determine, where might it actually find some support. And some people might be buyers, but some might say, I want to wait for a little good news to come in and see the pattern stabilize before pursuing some bullish entries.
Well, I don't know if you're aware, Connie, but it's been said that my middle name is Fibonacci. And I love drawing Fibonacci lines, but if we went from basically just the COVID bottom is probably a pretty common level from which to draw a Fibonacci maneuver. This makes a little bit of sense. What doesn't necessarily make sense, unfortunately, is that not only have we taken out the 50% retracement, but we've taken out the 61.8%. Connie, some traders will tell you that that is the last ditch line in the sand. And if you close below that on the chart, and that means on a week, this week, you'd have to close below 357 or so, that they would think that, Connie, it could go back to the level from which we started the Fibonacci.
Yeah, that's true. Now, it may take some more bad news and maybe more downgrades to really push it that low, but it's already had such an extreme haircut, like you mentioned, almost cutting its value in half, that you would think pretty soon something's got to give it some support.
You got to find something. I think the last comment I'll make as it relates isn't really specific to UNH, United Health, on the chart or price action, but just more around the idea of how do we decide to be buyers. And in a scenario like this, commonly the trader and the investor both just want to see that the selling has run its course. And how do we define that? Well, in order for the selling to have run its course, you got to see that we don't continue making lower lows, right? And, on a big gap move like this, the hope for the bulls is that you get an island, is that we've created an island here that will eventually be reversed. And the hope, and I say hope because there's just way too much unclear here, but you got to get a gap move basically through 343 to the upside, so then you can start filling the zone that we fell through and create an island. And an island reversal could be a wonderful opportunity, but I don't know that that's going to happen, Connie. It could just as easily gap to the downside again from here. And that's why I always encourage traders to think about it like driving in the car. You miss your turn on the highway, you don't just slam it into reverse at 60 miles an hour. Hopefully you go to the next exit and you turn around. Okay, let me just get that out there. But secondarily, if you need to reverse course, you stop the vehicle, you come to a complete stop, then you put it gently into reverse, and then you back up. We want to see the selling abate before we start getting long here in United Health. I think that's just a common process that many traders would likely employ. They're just going to feel better if they're buying when the selling has already run its course.
Yeah, and you've seen some evidence of that, certainly, hanging there at some support level.
All right. Well, we're going to keep watching that one for the coming days. Now, in a similar area, not identical by any means, but Regeneron actually got I see an upgrade. And the reason I've brought this up, Connie, was because of that chart. It's a substantial downtrend. We do have the potential here that we found some support. What are you seeing on this one? The reason I'm bringing it up, like I mentioned, an upgrade from Citi on Regeneron to buy from neutral, new target at 700, up from 600.
Oh, interesting. Yeah, some, technicians would note, hey, that looks like a double bottom. A double bottom typically is a reversal pattern. And a technician looking to play that double bottom would look for the stock to pass kind of that midpoint area that I'm thinking is around a little bit below your 613. So maybe that's about 610 or something like that. If it were to go beyond that, then some people might feel comfortable pursuing something bullish here after it's given a technical signal that it's beyond that midpoint level.
Yeah, we're right in the middle of it here. The unfortunate thing is that we're in the middle of that 90 to 100 point range. So risk reward is not going to favor bullish or bearish take at this point. I do point out the rising RSI down below because that is a bullish divergence with our last test of support here. So that seems notable, but I think many traders agree with you, Connie. It's really going to be a move through 610 to 615 on a close, which would get you above the 50-day moving average that might be indicative of a potential for a rally thereafter. So, but, always nice to get a price target bump. It's further nice if you're looking at from an analyst standpoint to get a note like that, an upgrade after a very large reversal to the downside. And the stock is off. Oh, let's just put the numbers to it. If I drew the line to where we are today, we're looking at down 52% and about 55 or more if we're talking to the lows there. So pretty healthy move. We had a real quick request there for a Fibonacci. And if you're looking for the stair step up, everybody, boy, look at where that 23% retracement is. If you slip through 615 to the upside, maybe that 23% at 680 or so, Connie, becomes a point of a pause in any pop to the upside. Can't assume the 200-day immediately becomes in play, can you?
True. Yeah, but that 23.6% area very well could be.
Great
and it looks like we're at our time here, Kevin.
We are.
Man,
it goes
this time
quickly here,
flies.
Connie. It goes so fast. But thank you so much for being here. This conversation has been fantastic. I'm so glad to have you. Any other insights you want to wrap with today?
No, I think just kind of keeping those ideas in mind and having a plan for yourself as far as what you're wanting to do, and then looking for the signals that you want to see.
I could not have said that any better. Thanks, Connie. All of you, thank you for joining us today. Big thanks to Barb for managing the chat. Please follow the three of us on X. Make sure you're subscribed to the Schwab YouTube coaching channel. And if you like today's conversation, it would help us a lot if you hit that thumbs up button down below. We look forward to seeing you all again real soon.